Hey, Dustin Tibbetts with Passport to Wall Street. Today we're going to talk about the trade of the week. We're going to focus on the tech sector, more particularly the semiconductor space. We're going to take a look at a stock in particular that has not been participating with the rest of the tech stocks. We're going to assume some weakness and talk about a short trade, or maybe two trades if you're interested, depending on how you want to trade it. The trade time frame will be in more of a short-term time period, so let's go ahead and walk over to it. We're talking about Applied Materials. The ticker symbol is AMAT, and what you can see here is, well, if you're following the NASDAQ, if you're following tech stocks at all, maybe some of the semiconductor stocks, you're seeing that they had a nice run there. Most things have been doing pretty well. In the event that they start to pull back, people are going to look for the weakest stocks first. Well, look at Applied Materials. AMAT has not participated in any way with this recent rally. And so what happens is technical traders will look at the semiconductors and go, hey, what if there's going to be a pullback? I would like to play the weaker stocks, and so that's where people will probably look when the semiconductors pull back. So Applied Materials here is currently trading at 49.70. That's where it finished the day today. However, it's basically at the lower end of the range, and that's what we're interested in. What we want to do is we want to find a way to play this down towards 46, maybe just a touch above that. And so there's a couple things you could do. The stock is not that expensive, so you could just short shares and look for a price target around this prior low here, which happens to be between like 45 and 46. Rough draft is where you can look. Now, another way that you could do this, if you're not interested in putting up the capital to sell the shares, is you might consider selling a call. You might consider selling a call spread if that's what you want to do. If you have the ability to and you want to sell calls and it makes sense for you, then what we would do is go out to July. This is the July expiration here. And we want an opportunity to make some money, but we don't want to take the same risk as we would with a stock. Remember, shorting a stock, you have a 50-50 chance of making a profit. Well, if we go out to the 52.50 calls and we were to sell those calls for, let's call it 80 cents in case the stock bounces and you're just catching this a little bit later. Let's say you end up selling those 52.50 calls for 80 cents. The probability that you will make a profit of some kind is about 75%. And so by collecting the 80 cents and selling the 52.50 call, why would we choose that one? Why are we looking at that one in particular? Well, oops, sorry, let me go back to the charts. The 52.50 price range happens to be right about the 200 moving average. If we go up to 53, that's a little closer, right? But we collected 80 cents. So right about where we get to stop, right where our break even happens to be, also happens to be the 200-day moving average. So we're using that resistance. If the stock happens to move against us, we've got this area as our break even to potentially use, as traders will use that 200-day moving average as resistance. On the charts there, the red line is the 200-day moving average. So again, by selling the 52.50 call, we're A, reducing the amount of capital that we have to put up to place the trade. Yeah, we're going to collect 80 cents, but also our break even happens to be at a resistance area that we feel like we can trust. So Applied Materials, that is the stock symbol trade of the week, and we're looking at either A, selling shares right about here down to the 46 area, or B, selling a call at 52.50, which gives us a greater probability of making a profit, but also has that resistance in the way. I hope you enjoy. We'll see how it goes. We'll talk to you soon.